Well, good morning, folks. Another quiet day in the market, but there are a couple of things moving, including gold, dollar yen, and one of them is not natural gas, not really moving at all. So just to follow up on yesterday's sort of bigger picture view on natural gas around the $1.5 to $2 level, this is a closer look on the 4-hour chart. What you'll notice straight away is these 4 red arrows down. These are the areas where I've been selling natural gas. We took 3 cents there, 2 cents there, maybe 2 or 3 cents there, and we're short again now at 2.35. So within this rising channel, this colored area here, we've also got a rising wedge pattern. The boundaries of the rising wedge are this bottom channel line, and you can see the area where we first bought. And the top of this rising wedge is formed by this flatter line going along the top here. So the rising wedge is a bearish pattern, and we did form a spike high into the top of the pattern yesterday. That prompted me to sell, but we haven't managed to make our way below the 20-period moving average. So the frustrating part about a rising wedge or a rising channel or an ascending wedge, whatever you want to call it, is that we constantly make fractionally higher highs and then move downwards. So it's really tricky trading it. We don't know which one of these tops will form a lasting top and prompt a stronger move down. Nevertheless, I'm going to keep on trying, and if you refer to yesterday's video, which I'll link at the end of this one, you'll know why. It's possible we have a number of months ahead of us leading up into sort of October, November, before we really form a base and take off from there. So for the moment, whilst we're above about $1.30 actually, I'm going to continue to look to sell into rallies, and at some point I think we'll hold convincingly above 1.85 and then above $2, and that we won't revisit those areas for some time to come. Let's switch to the day chart quickly, and on here you can see the pattern I put in yesterday's video, indicating that we may have some time to faff around at these levels until we eventually move up later on in the year. This fractal represents exactly what happened when we reached $1.50 going back to 2020. Granted, COVID-19 had just hit and was taking its full force in 2020, and that would have contributed to the price lingering down at these levels for perhaps a longer period of time. This rally that we've just had recently, moving up to the 200-period moving average on the day chart, might be considered premature by some, including myself actually. However, we must take into consideration that 2020 was the year of COVID, and that would have kept the prices down for longer. Nevertheless, considering the storage numbers right now, and the fact that demand might not pick up right now, and the fact that we may have an economic recession lingering in the near future in the months to come, and a downturn in economic activity also affects industrial output and therefore the demand for natural gas. Well, have a fantastic trading day, everyone, and a like and subscribe would be much appreciated, and I'll see you in the next video.